Howdy, folks. What's going on? Welcome back to the Anonymous Investors Podcast. I'm here with your boy God. Today, Martin Shkreli is here, and he's going to be dropping some knowledge bombs on you. What's up, God? Talk to the people. Say what's up.
What are you, live from Allentown, Pennsylvania?
Yeah, I'm live from the penitentiary. I'm on the burner right now. You already know.
You're going to get another 5 years.
It's I'm the CEO of K-Bio and Viera Pharmaceuticals, aka known as Turing Pharmaceuticals, formerly known. A lot of weird shit going on in the world today. A lot of cool shit to talk about, especially this week, man. It seems like there's a lot of shit that goes on when we aren't recording, which makes for good topics to talk about. But it also seems like there's so much shit going on that we can't keep up with. I don't know how you feel about that, but it's been kind of crazy.
I know. It's like every day there's something new going on in this crazy world.
Yep. So one of the main things we talked about, at least in the last few episodes, was just this whole gas crisis going on. Obviously, we hammered Ukraine and Russia home.
What are you, a flatulence issue?
Yeah, I have a gas issue, right? That was a good one. What are you, a dad? You're making dad jokes now, bro? You're making dad jokes? But no, yeah, anyway, the U.S. has a big flatulence issue, obviously, and that comes with the U.S. being morbidly obese. I'm sorry, Americans, but it's true. You need to cut down on the McDonald's, all right? But anyway, gas prices are getting out of hand. If you look even in certain parts of California, we saw that gas prices were nearly $7 a gallon. It's fucking getting crazy out here. Anyway, so no one knows how to combat what's going on with gasoline prices. I mean, well, what's the natural thing to think about? Well, the U.S., under at least a different administration, not to get political, but under a different administration, they were a net exporter of energy, and more specifically natural gas and oil, for the first time in 75 years. And America achieved energy independence. And now America is not energy independent. They're dependent upon other countries, which is obviously not a good thing because you need leverage, and you need leverage in trade. And, you know, the reality of the situation is the Keystone Pipeline and all these other things changed. But now what's going on is consumers are getting hit overhead at the pump. I know you drive. I know, obviously, I drive. And you see these gas prices are fucking ridiculous by us, right? So now what's the proposal, right? What is Congress going to do to kind of go to bat for the consumer and to try to lower gas prices? Well, this is one thing that they proposed, and I couldn't help but laugh my ass off as soon as I saw it. So here's a main thing going on. If you didn't hear about it, it's called the Gas Rebate Act of 2022. It's a bill that was proposed by Democratic leaders, and obviously from California, right? So here's something that you'll find that's very interesting. Here's CNN talking about it. If you want to look this up and read it on your own time, the headline is, "Some lawmakers want to ease the pain of high gas prices with direct payments to Americans." Doesn't that sound like something that was going on, like the COVID payments, right? I mean, I don't know. I'm just saying. Sounds a lot like the COVID payments that were going on.
Little stimmy checks again.
Yeah, that's what it sounds like. So here's the bill. The bill is called the Gas Rebate Act of 2022, and it was proposed by Representatives Mike Thompson of California, John Larson of Connecticut, and Lauren Underwood of Illinois. And basically, here is the gist of it. The gist of it is that they want to raise taxes on big oil companies and have them pay rebates for taxpayers of roughly $240 a year for single filers and $360 per year to joint filers. Now, their method, I'm sorry, go ahead.
Why would they do that when they could just produce more gas by using the National Gas Reserve?
Well, here's the thing with the National Gas Reserve, and I think that a lot of people had this huge misconception of it. So they have this reserve, and in theory, it's a fucking awesome idea, right? But if you look at the amount of barrels of oil they actually have in this reserve, it's only like 70 to 80 million barrels. And if you know anything about like the American economy and how many barrels per oil they use per day, it's about like 30 to 40 million at any given point. So like that reserve is more of like it's more of like a symbolic achievement than anything else. It's not actually very practical. So if we use 30 to 40 million barrels per day and that thing only holds 70 to 80 million, we're really only good for 2 days. They need to expand that. And I think that should be a main focus of like the next administration to come in, or it doesn't seem like the current administration is too keen on expanding that, but the next administration or whoever comes in, I think they need to focus on that. That needs to be something that it's such a brilliant idea because it gives you so much leverage in the world economy, especially dealing with OPEC, the cartel that it is, the oil producing exporting countries, of course, for those of you who don't know the abbreviation. It gives you so much leverage in the political landscape because the reality of it is this: the U.S. is a fossil fuel addicted country. They need fossil fuels to run everything. And truthfully, it's very hard to function. And I know you previously mentioned this about renewables. There's been a major shift towards renewables, but at this stage of the game, we can't just drop everything and go all in on renewables if we don't have the infrastructure to support it, right?
Right. And
So
I was seeing too, these gas prices are going up, but then there was a study, right, by the consulting company McKinsey, that the amount of oil of barrels on the market hasn't even actually changed. There's still 90 million barrels of oil on the market. So, like, how is that possible that there's 90 million barrels of oil on the market when Russia is sanctioned? Where is this oil coming from? So, like, I think the oil from Russia is actually getting into the market and then it's getting repackaged. I don't think there's actually an oil crisis that people think there is, because you see no drop off in the supply of oil through like Energy Insights and other companies are showing that there's no drop off, which is like very weird. How this oil is getting into the market, I don't even understand how.
yeah, I don't understand that either. I mean, unless they're kind of going through other countries as a proxy, right? That would make sense. Similar to how, some countries will bypass tariffs and trade restrictions, right?
Right, I think it's like the movie like War Dogs, how they like repackage the armory. I think like the oil is getting repackaged. That's
Very
why
interesting.
that's why
Very,
we're not seeing the supply drop.
very interesting that you bring this up. Here's another note that was going on with this gas rebate credit that was proposed. So separately in California, Democratic governor, everyone loves him, Gavin Newsom, has a plan to give out $400 debit cards to the state's registered vehicle owners. Drivers would be eligible to receive up to 2 of those refund payments per year. So you're talking about he wants to create a plan where he's giving drivers $800 a year. How unbelievable is that?
Driver
And
for
that's in
what? For
California. So
driving? Does it have to be an electric car or something? Do they just get it for if they drive?
no, this is dealing with gas. This is the gas crisis that's going on. So it doesn't even have to do with electric cars.
Well, I think a solution to this gas crisis would be to push people towards energy independence and push people towards the electrification of their cars. Then there's going to be less of a demand for gas if they push people towards electric vehicles. I think that's uh, obviously a very viable solution. And why don't they just push more and more people towards electric to decrease the demand?
I totally agree, but at the same time, right now we don't have the infrastructure to do that. If anything, right now is like such a huge turning point where it should push people towards it should push the government and taxpayers more towards investing in green alternatives. But at the same time, we don't have the infrastructure. Like we need to build up that infrastructure while we're still producing our own gas and natural gas and consuming it. I think we need to focus on energy independence, at least using natural gas and oil, and then at the same time hedge our bet and really hammer home green energy and give tax credits and tax breaks to companies that focus more towards that, and not in the form of like the Green New Deal, right? Where if I'm a developer, a real estate developer, you know, at least with what I did in the past, I worked with a lot of real estate development companies, construction companies, right? And we had developers that like they were getting hit over the head because of the Green New Deal. Like if there are certain materials that they were once able to use. So if you actually look at what you're supposed to use, it's almost like you're building these massive skyscrapers that aren't going to be structurally sound because you're not allowed to use steel, you're not allowed to use, certain types of glass. You're not allowed to use rebar. Like, you might as well just build the buildings out of popsicle sticks and just hope for the best, So it's getting a little unbelievable. But then you have certain companies like Exxon. I remember we spoke about briefly. Exxon was investing more into green energy, right? They've been sort of a big leader in that push. I know you could speak a lot more about that than me, but Exxon looks like they're making major strides to kind of push towards green energy, right?
Yeah, Exxon's actually they came up with this, or they're gonna come up with this carbon capture system, because they're releasing a lot of like flare gas into the atmosphere through their natural processes, and they're gonna capture this and then repackage it and then mine Bitcoin with the carbon that they capture, which is an interesting concept, because if you look at the Bitcoin hash rate, the hash rate of the Bitcoin network, and then you look at the capex of like energy costs, like there's literally no extra capex for these gas and oil companies to do this. So they're going to be one of the best positioned. They're going to be one of the best people positioned to capture the upside of Bitcoin.
That's a real positive thing that they're doing. I mean, it's smart to move into Bitcoin mining, especially if you're using like extra energy, right, or emissions that are coming out, because at least you're using it to do something productive, right? So as far as Bitcoin and everything related to Bitcoin, I mean, like, where do you see Bitcoin mining going, right? Because there's been so many people publicly who've come out and criticized it, and they've basically come to the conclusion that it almost seems like they don't care about how green the mining has become.
Well, those are just
A lot of
those are just bozos. Those people are bozos. They criticize the energy that Bitcoin mining is used, but they don't look at the amount of energy that the natural financial system uses. You think the money just comes out of thin air, and that when the Federal Reserve they lower interest rates, and then they give it to these banks, and then these banks have their internal systems, and they're using energy there, and then the employees that the banks hire, how do they get to work? They drive to work, and that's how they get their loan originations, and that's how they stimulate the economy. So people are not looking at the full picture and the amount of energy that the financial system uses already. And if they looked at the amount of energy that the financial system uses already, and then they compared it to Bitcoin, they would be surprised at how Bitcoin is actually more efficient than the financial system we have today. So these people are just like retarded, dum-dums.
I don't know if you saw, but like, if you remember this, Bill Gates came out and he was publicly speaking about how like Bitcoin's inefficient and the mining isn't very green, and he wanted to like kind of stop the mining. Remember proof of work mining? He was really going after that. And then all the crypto miners were just like, okay, bet. And then now it's like 75% of all Bitcoin mining is like green mining, right? Isn't that what's going on?
Yeah, they said the banking system, right? This is from a study. They said the banking system uses 263.72 terawatts of energy each year. That's nowhere near what Bitcoin's using. So if you want to criticize the energy usage, you look at the energy uses of the actual financial sector. We could actually be more efficient. We eliminate these central bank bozos. We switch to Bitcoin, and we actually make a progress towards becoming more energy efficient. Because you got to think about too, right? ATMs. You go to ATM, right? That's all energy being used. We plug in. You think the ATM just turns on? Nah, you got to plug that shit into the wall, my dude. Right? You got these banking data centers. You think these banks, they have like these global apps and stock brokerages. You think, oh, it just magically pops up and there's no electric being used there? Nah. Like these people are stupid. They're listening to Peter Schiff, and they don't even know what's really going on in reality.
And the other thing that I feel is worth mentioning is that, like, for people who don't know, the traditional financial system operates within what, like an 8-hour window, 5 days a week. So you're talking about a system that's not only very antiquated, but the energy consumption is so much for something that's literally only open for most people anyway, right? Like 90% of people who aren't like institutional traders or market makers or guys in the futures markets and options market, like for 40 or 45 hours a week, the consumption, the energy consumption compared to like the crypto market per se is so much more, right? Isn't it like 5x more? And it's only operating 45 hours a week. Conversely, where the crypto market is 24/7 and it consumes like a fifth of that, right?
Right. I think it's one third of the energy usage that
That makes sense. One
the
third, yeah.
actual banking sector uses, and that's not even to mention debit cards. Like debit cards, another antiquated form of making payments. Like, why do you need debit cards and all the energy that a debit card uses?
Yeah, Dave Ramsey, you want to talk about debit cards. Dave Ramsey preaches debit cards and they don't even have the same fraud protections as credit cards. Not only that, but they also don't offer the same purchase protection either. Like if I use one of my cards and I go and I buy something, typically like it doesn't really depends which credit card issuer you have, but most of them if you have like even a no annual fee card, you typically get anywhere from like 3 to 6 months of purchase protection. So like here's a great innovation, like a company like just to pick any company arbitrarily, like American Express, they'll offer purchase protection on like a new iPhone if you buy a new iPhone. So Apple tries to upsell you on their own insurance, Apple Care, which is typically expensive for the average person. It's anywhere from like $100 to $200. I haven't bought it in a while. I haven't bought a new iPhone in a while, but last I checked, it was about $100 or $200, right? And you're covered for like a year or two. Well, you could get basically Apple Care if you use an American Express no annual fee credit card and you're covered for like half a year. So it's like literally the same thing as Apple Care, but you're covered for less time and it comes for free if you use your card. What now? They're not doing that out of the kindness of their hearts, obviously. They're doing that in a sense of like they want to show you that, hey, look at these perks. You could get everything if you sign up with us. And then they're looking to hit you over the head in interest. But if you're smart and you're a savvy consumer, what you do is you use your credit card, you buy the new tech, you buy the $1,000 iPhone or whatever the cost is, very expensive, 800, 900, $1,000 upwards.
Oh, you know what they're doing with iPhones? Apple just announced they're forming a subscription program where you pay a certain amount per month, and then you could switch out your phone whenever you want. So you just pay like a fee per month.
That sounds a lot like what T-Mobile does, because T-Mobile doesn't do contracts. A lot of people don't know that, but they're an okay, service provider, relative to everyone else. It seems like Verizon, AT&T are the big dogs, but those companies kind of lock you into a contract. It's very similar to what T-Mobile's doing and has done for a while. But I do like the fact that Apple themselves are doing it. That's awesome. So
Yeah.
how is the affordability of that for like an average person? Like how
Well,
much per month
they're
would someone
doing research on it now. They think it's going to be between $30 and $40 per month, and then you're going to get Apple Music, Apple Arcade, Apple Fitness, Apple News, and then you can change out your iPhone when a new one comes out. Like you're not locked in, so it's going to be between $30 to $40 a month.
So does that include service as well?
No, I think that's just for the phone.
Okay, that's not bad. So with Apple Music, would that be like a family plan or anything like that, or no?
No, just I think it's going to be just a single for you.
Okay, so it would just be like Apple's main like infrastructure of products, so like Apple News, Apple Music, and then what were the other ones you said, like Apple Arcade
and Fitness and Apple News.
That's pretty good. That's not bad. For $30 a month, that's not too bad. What about Apple TV? Do you get that with it or no?
I don't think so. No, I don't think you get that with it.
Yeah, Apple TV is not bad. I don't know what it is with Apple. Apple just kind of like I love them as a company.
Well, they dropped the ball. They should have bought Disney, and they would have been in a much better position.
They could have.
They would have had Hulu under their wing because Disney is owns Hulu, so they would have had Hulu, Disney, and then they could have had made their own content too. They would have been a content machine, and they would have rivaled Netflix, and they would have rivaled Paramount Studios and MGM and Amazon. So they would have been in a much better position than they are now, content wise.
Here's another thing too with Apple. I was reading this recently. At one point in time, they could have bought Disney and they could have bought Netflix. They could have bought both of them at the same time.
I don't know if that would have went through though, antitrust wise. I don't think that would have went through.
You don't think they would have been able to buy Netflix and Apple?
No, I think they would have had to. I think Apple would have had to choose between Netflix and or Disney. I don't think they would allow those two. Those are like the basically only two big competitors in the market is Hulu and then Netflix. So I don't think you would be able to consolidate them all. I think antitrust would come down on them.
I think Disney's infinitely more valuable. Like you look at the brands that Disney owns, Marvel, obviously the traditional Disney figures that they have, Mickey Mouse, Minnie Mouse, you know, Goofy, Donald Duck, all those characters that everyone knows, the older crowd knows. But then you have some other characters too that are like these new films that they've been doing. Like, oh, bro, Pixar. Pixar's the biggest thing. If you want to talk about a moneymaker for Disney, bro, Pixar like prints money, prints money. They are literally the best animation studio on the planet. Like, it's not even close. If you compare any of these other movies that come out, animated films, DreamWorks, doesn't matter. They can't compete. They can't compete at all. I'm a big Disney guy. I know a lot about them as far as like a lot of this. It's a fascinating company to follow. Like if you actually follow what they've done in the last like 30 or 40 years, like dude, Disney. I don't know if do you know a lot about Disney or not really like the corporate history? Because I'll touch on that a little bit if you want me to.
Yeah, sure.
All right, so like obviously Walt Disney founded the company, built the company, right? He had like Roy Disney in there, who I believe was his nephew, and then also Walt Disney's brother was involved with the company for quite some time as well. But basically, Walt Disney had this whole idea of like, creating the brand, creating Mickey Mouse, and then like kind of getting into filmmaking, and he did that for quite some time up until his death. And then, he opened Disney World in Florida. That was like his grand vision. But unfortunately, he died before Disney World in Florida opened, right? So his whole idea was like make films and take everything that he makes from animating and kind of put it into theme parks, which was like kind of his master plan, right? Um, so it's fascinating how he even came to like opening Disney World too in Florida. So he purchased all the land through like different shell companies he created. So he would go to people and just offer them like a ridiculous amount of money through like some random shell company that could be called like Michael Jackson LLC or whatever. And then just buy the person's fucking land. And then he'd have another one called like Shit Fuck LLC and just buy everyone's land. So no one knew what was going on. And then by the time people kind of found out, he already owned like most of Central Florida, like in Orlando. And then obviously built the theme park. But after his death, there was kind of like a power grab that was going on because there were people who at Disney kind of wanted to carry out the same vision that Walt Disney had and focus in on making like animated films and making like children's movies. And then there were people who were kind of more of like corporate raiders. So there was one point where like Disney was going to fall victim to like corporate raiders. So to save the company, like Roy Disney kind of stepped in and he picked Michael Eisner to like take over the company. And this is all fascinating stuff. Defunct Land has like an awesome series on Disney videos. If you want to learn about that, I highly recommend anyone who's interested in this type of stuff to go and check out his channel. Phenomenal channel. Focuses mostly on like the history of Disney, but also like rides that were very popular at their time for either being infamously popular, like shitty rides, or like really good rides that unfortunately Disney had to cut because they couldn't process like enough people through the ride per hour. So like one of the best rides in Disney's history, just as an example, like offhand, it's called 10,000 Leagues Under the Sea, but it's everyone says this is like Disney's best freaking ride, right? But like they don't have it in any of their American parks because they can't process enough people through the ride. So like people would wait on massive lines just to get on this ride and like they would have no shot of getting on. So you're talking about 3 or 4 hour waits minimum on like a slow day for this ride. And there's no way these people would get on the ride because they'd have these submarines that would go around, and in each submarine they'd only fit like 15 to 20 people, and they have a line of like 500 people. So like it's just not going to happen. You have like 3 submarines, and the ride itself is like 10 minutes. So you're talking about maybe you get to like I don't know 1,000 people every like 2 or 3 hours, and the line just like never ends. So they kind of replaced a bunch of these rides that were old school like that with newer rides with shorter durations and stuff like that. But there's a lot of logistics that goes into Disney. But anyway, Michael Eisner is like the most controversial figure in Disney because he, at the same time, he's like the best thing and the worst thing to happen to the company. he was like a phenomenal businessman, like understood everything from a business perspective, but he got like super ambitious. And he opened up all the theme parks. So like Tokyo Disney, he opened up. Um he also opened one up in Hong Kong. Hong Kong and Euro Disney. Euro Disney is like Disneyland Paris, and most people consider Euro Disney to be like the worst one. Like in terms of profitability, I think they had one profitable year, and that
But
was
what
it.
about Disney Hong Kong?
So Disney Hong Kong was interesting, because they originally opened there while the British still occupied Hong Kong. So the British turned over Hong Kong to the Chinese government in, I believe, the late 90s. And before that, Disney opened Hong Kong, which was interesting because their main draw was like, okay, we have a Disney park in China, so we'll get mainland Chinese tourists to go to Hong Kong to visit it. And then at some point, when um, Bob Iger, I was drawing a blank there. When Bob Iger took over, he was just like, we're building a park in Shanghai, and then that was it. So then they built Disney in Shanghai. So now no one goes to Hong Kong because if when you look at the topography, uh, at least geographically, of like who, where most people live in China, they live in mainland China. Like China has one of the world's largest populations, and most of the people live in like Shanghai, Beijing, and any of the mainland areas. So they don't. So Hong Kong is pretty like heavily populated, but it's not populated enough for like them to build a park there. But that was like their way into China, kind of. So they built this park, and then eventually they opened Shanghai, and the people in Hong Kong were like really upset about that because they knew that most of their traffic was from, at least tourism, was from mainland China, mainland Chinese tourists. So then they opened up in Shanghai, and then that was it. Like Shanghai just kind of, like Hong Kong, they still have Disney is one of those weird companies that like, even though they bleed money with Euro Disney. Oh, and Euro Disney almost bankrupted Disney itself. Like they literally almost went bankrupt. Um, but under Eisner, they devised this like business model where, I don't know if you saw this, like Disney Sea. It's in Tokyo. It's fascinating. Everyone says it's like the best Disney park, and the funniest part is that Disney just licensed out all their likeness for like characters and rides, and they let this company called, you could look this up if you want. It's very interesting to read about. The It's called the Oriental Land Company, and they like built all the Disney parks in Japan, all the newer parks, and in China. And this company, everything that people commonly say the best Disney park is Disney Sea, and it's not even made by Disney. Like that's how insane it is. And people like Disney Tokyo and a lot of these other places too. And it's hilarious because these are the best Disney parks, at least commonly cited by Disney enthusiasts, and they weren't even built by Disney. So Euro Disneyland almost bankrupted um, the Walt Disney Company, and then the same thing with Hong Kong. So Eisner's very controversial because he focused, like under his leadership, the company was its most profitable, but he was very ambitious and he tried to like scale too quickly. And he took on a lot of debt doing that. So then they had to devise a model to kind of like outsource the bill, future theme parks because they were hemorrhaging money with those two projects. So that's why like the Oriental Land Company is ridiculously like profitable, and a lot of people don't even know about it. So real interesting stuff. Real interesting stuff.
This is the thing too, right? You look at the success that Disney's had with their theme parks. Why doesn't like a Netflix or Hulu make their own theme parks and use the content that they generate to basically have their own theme parks with their characters and everything like that? Like I don't understand why these subscription programs like Paramount, Netflix, and Hulu, they don't have their own theme parks.
Yeah, so I think a main play with that would be for Universal to go to them because Universal has Universal Studios in Florida, and they also have some locations in California and as well as around the world. If I was Netflix or Hulu, any of these Disney competitors, I'd go right to Universal and just honestly license out the likeness of characters. Make a Stranger Things ride. You know how many people would go on that
The
ride,
games, that
Stranger
would be
Things?
nuts.
That would be amazing. That would be incredible.
Right, these
So
rides would go nuts, absolutely nuts.
yeah, and it's cool too because you know that Universal would obviously do this. Like, there's no reason why you shouldn't go to these other companies and say, hey, We have a hit Netflix show. We've got, Stranger Things. That would be a phenomenal ride. Like, think about, I don't know if you've ever been to Universal in Orlando where they have that Harry Potter ride, but that's another great ride that they've recently built. Something similar to that, but make it Stranger Things themed. Like, they have ET. It's like, okay, great. You have ET. ET's a shitty ride now. Like, it's so outdated. They don't do anything with it. I love ET. ET's classic, like a classic movie, great Spielberg film. I mean, really, it doesn't get more iconic than that. Like, when you think of Universal, you think of ET, but like, you don't need an ET ride anymore. And then also, they have a bunch of Star Wars rides in Universal still, because that was before it was owned by Disney. If I was Disney, I'd be like, listen, bozos, like, you got to shut that shit down. Like, we own Star Wars now, so like, you can't have Star Wars rides in there because we have Star Wars Land in our parks. So now, because we own the rights, like, we're kind of going to claw it back or whatever, or however long they own the rights to having Star Wars rides. Like, if I was Universal, I'd be thinking of very quickly. I'd be trying to think of alternatives. So I also think that Disney. We previously spoke about this off stream or off the air. We spoke about how Disney owns 21st Century Fox. So I believe that Disney, like, in an indirect way, owns The Simpsons, because 21st Century Fox they own The Simpsons, like, and the likeness. So that's another thing. Universal has like The Simpsons land, and I think it's The Simpsons is a little bit of like mature humor for Disney. So like, they kind of own it as like, they own it sort of, but like, they won't directly claim ownership of it, and they won't incorporate any of that into their parks, which I think is kind of silly, because Disney, everyone knows Disney as like this clean cut family company, but at the same time, like, that would be good to have like a nice change of pace and maybe have something a little bit geared more towards like adolescents or adults. Maybe like a segment of a park or something. They should do that. And like, that's another thing too. I don't know about you, but if I'm Disney and I own The Simpsons indirectly by owning 21st Century Fox, and you have a section of your park that's dedicated to The Simpsons, and it's a giant area, like, I'm going to hit you over the head if you want to continue to have that Simpsons area in your park. So I don't understand why they don't do that. It doesn't really make any sense. So again, Universal should look to like new and up and coming brands, and these licensing deals like Netflix and Hulu and even Amazon. Amazon has their own original shows, which are obviously aren't as good as like Netflix's shows or Hulu's original shows, but at the same time, it's like there's no reason why you can't license out some of these things. NBC was smart, by the way. I don't know if you saw this. NBC is smart because obviously they made Peacock and like they have The Office on there, and I'm sure at some point they'll move Seinfeld over after Seinfeld's done on Netflix and whatever, because it's on Netflix and Hulu, I believe, right now, but it'll eventually be on Peacock because NBC owns the rights to that show. But NBC, they licensed out the Jimmy Fallon ride. I don't know if you've ever seen that. It was a decent ride, but they licensed that out, and they were smart because they know that people love the Tonight Show, and it's a huge part of American culture. It's more of like an establishment outlet. But I thought like that was a big time power play because as much as the younger generations don't really care too much for late night television, um, it's smart because it'll draw in a lot of the older crowd that really kind of grew up with the Tonight Show, and they would kind of reminisce about watching Johnny Carson have these up and coming comedians on, and famous celebrities, right? And Jay Leno was on there for quite some time too. So there's a lot of older people that will like that. So it appeals to the older demographic that still regularly watches the Tonight Show or any sort of like conventional media outlet.
Right. But yeah. What was going on? You said you recently saw a video about Dave Ramsey. What was going on?
Yes, I'm glad you brought that up. I got on a little bit of a tangent there, but yeah, I brought him up when we were talking about debit cards. So Dave Ramsey, we just spoke about crypto too with Exxon. So getting back on track here, I digress. We recently spoke about crypto. So like Dave Ramsey has been like super overly critical about crypto, so much so that it's this real weird thing with Dave Ramsey. It's almost kind of culty. I don't know if you've seen this. His employees, they all share the same opinion as him when it comes to money. Now,
Well, they're not allowed to have their own opinions. They're, if they have a different opinion, they get fired.
Well,
like, do you think if one of his employees,
I don't know if that's true,
he said, like, I have a credit card, do you think he would still hire them? I think if someone said to him, like, I have a credit card, and they were an employee of his, I think he would fire him.
I don't know what the grounds are there. I'm not Dave Ramsey. I don't work for him, so I don't know what the case is. But I do know this. So recently I came across this video. I don't know if you've seen it. Dave Ramsey's employees, I believe it was John Delaney and George. I don't know if you've seen this George fella. Glasses, he's got the beard, ginger. He seems like an interesting guy. He had some good tips about, managing money and budgeting and things like that. But dude, they are so fervently against cryptocurrency. It is unbelievable. Like these guys are the mental gymnastics that they do to try and discredit cryptocurrency is hilarious. I got a segment here I'd like to show you. It's a couple minutes long. We'll play the segment out, and then we'll offer our thoughts at the end. But it is unbelievable what these people do. I mean, like I said, the mental gymnastics. You're going to be blown away when you hear this. Wait till you hear this. Unbelievable stuff here. So here we go. So the title of the video, if you want to follow along or go back and watch this at a later point, it's Ramsey Show reacts to horrible crypto advice on TikTok. So there is a lot of bad advice on TikTok. We see a lot of young people going on there, people running their mouth. They don't know shit about finance. They don't know anything about investing, but they're going on there and they're running their mouth or whatever. They're just parroting what people like us say, who are professionals, who work in the profession, who have, a well-documented long track record of, generating glorious amounts of alpha. Okay. And for those of you who don't know, alpha is just excess returns over the market. So the 100-year average of the stock market, adjusted for dividends reinvested and inflation, is about 7%. People commonly cite 10% that does not factor in inflation. So 7% is the true 100-year market average. I know, and at least in my case with my portfolio, and particularly with equities, I've more than beaten that in my 12-year history of investing. It's actually like 10 years pretty much. Yeah, that's when I kind of got into it. I know God's the same way. He's had a very long proven track record. How we came to become friends, and that's a whole nother story for another day. Maybe we'll touch upon that in a later episode. But we became, basically, the TLDR is we too long didn't read. We became friends because of our shared interest in equities and investing, which is why we have this show to begin with. But anyway, I digress. So here we go. Ramsey's show reacts to horrible TikTok advice regarding cryptocurrency. So here we go. This will be really funny. I know you guys will enjoy this. Hang on here. This thing is just being real silly. So let me see if I can find this here. Here we go. All right, here we go.
People could always fast forward,
Yeah, let me know if you could hear this, because we've been having some issues here with the audio. Hopefully you'll be able to hear this. If not, I'll keep trying, and we'll circle back to this. It's not a huge deal. Hopefully you could hear this. Let me know if you hear this. All right.
All right. Hit play.
Remember, Don, your mic is hot.
Yeah, we're
You
good.
hear it, right?
We're good. Yeah.
Beautiful.
Raise it up, though. Raise it up. Pump up the volume. Pump up the volume. Now I'm not hearing shit.
Oh, you really don't hear it? What the hell?
No,
Right.
it was on and then it came off.
All right, hang on. I don't know what the hell's going on here. Just give me 1 second, folks. Bear with us. Software's bugging out today, but nonetheless. All right, I'll play it now. Let me know you hear this.
So choose your words.
We're
Good.
good?
Here's what would have happened had
Beautiful.
you invested your $1,200 stimulus check that was first issued on April 12, 2020 into these top 10 most popular cryptocurrencies. $1,200 investment into Bitcoin today would now be worth $7,538. $1,200 investment into Ethereum would be worth $22,929. Into ADA would now be worth $76,363. Into BNB would now be worth $28,720. $1,200 investment into XRP would now be worth $5,873. Into Solana would be worth a whopping $210,389. Into Chainlink would be worth $8,499. $544.
I think he's just making them up.
Would be worth $126,000.
Look at this idiot smiling, thinking he has a point. Fucking bozo.
A $1,200 investment into Terra Luna would now be worth $180,000.
Well, George, my
There we
hemorrhoids
go.
are back.
There they
Hemorrhoids
are.
are back.
They're back, John. Wow.
You know what else is cool? If I had not gone to Taco Bell yesterday, I wouldn't have indigestion.
Is that how that works?
You know what he didn't play? He didn't play the other 10. Gosh, dude.
So let's just recap what just happened, John. First of all, I think he made up about 17 words in there. How do people just keep up, man? And here's the other thing. Hindsight is 20/20. John, you're an idiot. If you invested in Apple in 1984, just $100, you'd be a millionaire by
But you
now.
know, if you invested in 18 or 6 and put some money in Ford shares, you'd be a gajillionaire.
So, John, I was just in Vegas, and I put 16 black, and I went all in on it. I won big. You should also put 16 on black next time you go, because that's the winning number.
This is such a terrible use of statistics. Everybody, jeez.
I don't know if we can call it statistics. I think professors all over are angry right now.
Well, it's just this. It's this. No, man.
You got John all breathy, America.
You do have me
Look
all
what
right.
you did.
Because I hate the manipulation of data to A, make people feel dumb.
Oh my
Ford
fucking god, I hate this guy.
could have made. And I'm not even going to go should have, because we actually have real data of what these things are worth.
Fucking redneck.
Yeah,
Hold on a
producer-
second.
We'll reserve our thoughts until the end. Don't worry.
Well, if you had them, so you should. Because there is zero, none, zilch correlation.
Let's hear his full thought here, you know?
And it left out 10,000 other crypto, like whatever, cartoons drawn with some kid's laptop. It left all that out who people lost their minds, right? So you take a narrow snapshot of those things and it makes you feel stupid and left out. And then that's going to encourage people to go make some reckless choices with their money.
Oh,
Nonsense hurts people. It's not helpful. No, it's not helpful.
Not at all. It just gets.
I hear the groaning.
Makes you feel more
Let's hear his full
vulnerable.
thoughts here. Come on
I
now.
missed out again on the next big thing. And as we know, timing the market is the most dangerous thing you can do. And we say it's not about timing the market. It's not about timing the market. It's about time in the market. It's about consistency over time, when it's up, when it's down.
pinhead thinks he's Buffett.
And things long
Relax.
proven track record. That's why we recommend mutual funds over the next meme coin that just came out. So producer James pulled up some.
All right, listen to this. Listen to this. This is
Pulled up
big.
some interesting things here. If you had invested $1,200 into Ethereum in November 2021, as of January, you would have $840. There goes.
Who gives a
$400.
fuck? That's 2 months. We'll go
Listen,
back.
listen.
November 2021, as of
Pause.
mid-January,
You gotta pause. I gotta talk now.
$60.
You
The,
gotta-
the point isn't done. Hold up. You got to hear this.
talk
You
now.
gotta
I
hear
gotta
this.
talk now. He said if you invested 1,200 in Ethereum in November, you would have
Yes.
840. Okay, if you
Right.
invested 1,200 in November, right now you would have about 400 in the stock market because it fucking declined 66%. So you have to compare everything relatively. This guy's a fucking complete bozo.
Exactly. This is what the producer gave them. So just listen to the rest of this. Listen to how ridiculous this is. I wanted to play the whole segment for you. I knew this was going to happen. By the way, folks, I don't know if you know this, but God, I'm a big crypto guy too, but God, he hates these motherfuckers that come in with their bullshit facts. And you know what? I love watching it. I'm a little bit of a troll here. That's why I picked this segment, because I know that I could see the smoke coming out of his ears about John Delaney. Look at that little grin on John Delaney's face. God's like, he wants to smack the shit out of him and knock that grin right off.
Fucking iron your shirt. Like, come on.
Metaphorically, of course.
Like if you would have invested in Bitcoin, he could have actually bought a fucking cashmere shirt instead of that fucking cotton piece of shit that he's wearing. We have enough money to
All right,
actually
folks,
buy cashmere.
let's hear the rest of this. So he offered a 2-month timeline with what was that, a Bitcoin or something, or Ethereum, whatever. The producer gave him notes, and the notes are so horrible. You got to hear this, folks. He doesn't even use the same timeline for each coin. So remember, the first coin was only 2 months. November, December, January. It was only 2 months. Listen to this now. Hang on. Hear the rest of the coins that he lists out. This is hilarious. The guy pulls the dates out of his ass to be like, oh, if you add it from this time to this time, you're down. But he doesn't use the same timeline. Just pay attention, folks. You got to hear this. This is so
Well, he doesn't even
hilarious.
talk about diversification in coins.
Right, he doesn't. He
You could
just
buy a
he
basket
just writes
of
it off
different-
as it's
you
all
could buy a
garbage.
basket of
Hang on.
different
Let's
coins.
reserve our thoughts here. We got
He
another
talks about
couple of seconds.
diversifying the stock market, but then he says, "Oh, you put all your money in this meme coin. No, you have to diversify into different coins.
We gotta play the rest of the segment out, and then we'll offer our thoughts at the end. But you gotta just hear how ridiculous this is. I knew this was gonna get you all riled up, which is why I picked it. It's good entertainment, and it's good lessons for people listening. So here we go.
Congratulations.
Just lost half your money. Way
Golf
to go.
clap, America.
If you invested $1,200 into Dogecoin in May of 2021, as of January, you would have $360 instead of
You're an idiot. You invest into Dogecoin, you're an idiot.
For a fact, John, here's why. When we were doing the episode on cryptocurrency on the Fine Print podcast, which you can go listen to wherever you listen
Middle
to
school
podcasts.
boys everywhere were angry with you.
They're very.
All right. Anyway, that was the segment. What's interesting about it is that
He talks about Dogecoin. Like, come on. Like, you
yeah,
gotta look at
Doge was the
Coinomics.
biggest. Doge is the biggest piece of long time. You know what? Actually, I take that back.
The whole purpose
It's a
of a
crap I've seen
cryptocurrency is
in
it's
the last
supposed to be
time.
it's supposed to be deflationary. So like, why would you buy Dogecoin that doesn't
Right.
have a
Infinitely
fixed cap?
inflating. It's worse than the dollar. You're better off
You
holding
want
the
a
fucking dollar.
cryptocurrency with a fixed cap. Like if you're buying a cryptocurrency doesn't have a fixed cap and that keeps inflating every year, you might as well just keep your money in the dollar. You're not solving the problem that cryptocurrencies solve. which
Right.
is
At least with the
basically
dollar,
deflationary.
inflation's only 8% a year and not fucking 1,000 or whatever the fuck it is with Doge, you know? The whole point of cryptocurrency is to get away from infinitely inflating medians of exchange that lower your purchasing power, right? The whole crux of crypto when it first started, you read the Satoshi's white paper, it's literally geared around we need to get away from the banking system, the U.S. financial system, which is at that point, 2008, 2009, even today, is the global financial system. The whole crux of it is Satoshi saying we need an alternative. Not that it needs to be as big or as robust as the U.S. financial system, but we need an alternative system where we could preserve purchasing power, which is that is the thesis for Bitcoin, right? The whole fixed supply, 21 million.
Right.
Nothing will ever be created past that. It cannot be counterfeited. Once enough people agree that it has value and they see the use of it and they see the divisibility of it and the ease of access and ease of use, it will become widely adopted and widely accepted as an alternative.
There has to be a reason for the medium of exchange. Like if you have a cryptocurrency that you could use, that you can only use on, say, let's say Amazon created their own cryptocurrency and you had to buy that cryptocurrency to basically buy an item on Amazon, that would have value. You can't just go around buying a piece of shit cryptocurrency that's not a medium of exchange, that's inflationary, that has no utility, and then expect, oh, I lost all my money. It was a meme coin. Like, what the hell are you doing? You got to spend hours and hours of research. You can't just wake up one day and say, oh, I'm going to strike rich. Pull that slot machine. That's what these people on Dave Ramsey, they like to think. They spend more time on their tractors instead of fucking talking about cryptocurrency. This is too technological for them.
Look, I don't have a problem with Dave Ramsey listeners. I think they're people trying to better themselves financially, and I don't see anything wrong with that. It's just that I think they're going to the wrong person, just like anything else, right? God, I know this is something that you'll really appreciate that I have to say. Just like you diversify in your portfolio, you should diversify opinions. That's something that a lot of people don't do nowadays, right? You have to diversify opinions, and you have to diversify the informational intake of opinions. So just like if you go to a news outlet, let's say that you're Republican, you should listen to liberal news outlets, right? You should listen to moderate news outlets. You should listen to socialist news outlets. Or vice versa. If you're on the left side of the spectrum, if you're on the left side of the political spectrum, you need to listen to opinions from everyone, because it's what creates a more well-rounded person and will give you a broader view of the world. So just like with financial advice, if you listen to Dave Ramsey, you shouldn't just religiously listen to Dave Ramsey. Dave Ramsey is proof that his formula works for him. It's not proof that it's going to work for you. It's proof that it worked for him and it worked for a lot of other people. So it might work for you. But the reality of it is this. Dave Ramsey proposes buying your house in cash. Okay. If you live in, I don't know if Dave Ramsey is well aware of this, but the large majority of Americans live in coastal cities and metropolitan areas where housing is essentially unaffordable.
Moronic.
If you wanted to buy, I agree in a sense, he is a moron with that take, because he's offering advice that isn't applicable to probably 90% of his potential audience, because 90% of Americans, his major demographic is Americans, right? Older Americans. Like, unless you bought a house in New York or LA 20 or 25 years ago and you had that much cash sitting around, which even then housing was very pricey, a little bit more affordable than it is today, but still very
You
expensive
would still
on that
be an idiot
spectrum.
because you could have bought 2-3 houses.
Right. And you
You
could have
still
used
be more.
leverage, and you could have rented them out and generated monthly cash flow, got tax breaks. See, the thing with real estate that's very interesting, and I'll touch on this very briefly, but we could have a whole episode dedicated to real estate. I love real estate so much. I worked within the field. And real estate, like, it literally is one of the best investments of all time. You're talking about, with real estate, this is access to things that the average person normally does not have access to. So with stocks, you could do the same things that I'm going to mention with stocks, but it is a little bit more complicated, right? It involves like futures, and it'll involve options. And most people, they don't have the fucking time or the patience to learn about something that's so archaic in the financial system, right? So real estate's good for this. Real estate, number one way to cash in on real estate, appreciation, either through forced appreciation, which is what I like to call sweat equity. You buy a POS house, piece of shit, you fix it up, put a new kitchen in, put a new bathroom, put some new tiles in, boom, bing, bing, your equity goes up. You spend 15 grand remodeling the house, and now all of a sudden the home value increases by 50. Congratulations, you just made $25,000 in equity. Right? You just made $25,000 in profit. You put 15 into the house. That increases the value by 50. Way to go. Okay. That's number one. Appreciation, forced appreciation. Now, 1B is appreciation of the value of the property based on the area in which it's located, right? People talk about location. That's big in real estate. If there's major developments going on in the area and major development projects, and more specifically, and this is what a lot of people don't talk about, corporate developments. You have new office buildings being built. You have major companies moving into neighborhoods and into the residing areas. That's going to boost the value of the
Well, you would never get in at the cheap price because you would be waiting to save up the cash. So you would miss out on all this appreciation.
Exactly. But I'm just
picking your nose.
Exactly. So just to touch on the other major areas to make money in real estate, appreciation, that's number one. And I'm going to very, very basically cover this. We can go into this in depth in another episode, which I think we definitely should, because this is something that can help a lot of people and it can improve lives. So, and we believe, like we said in the past, on the Anonymous Investors podcast, we believe in the democratization of information. Anything that we could put out there that has helped us in our personal lives or helped us with our experiences, we believe that everyone should have access to, because it creates a better society, and it'll create a situation where people will be happier, morale will be better. And when people are doing better financially, there's less crime. There's also more availability to resources. It also puts people in a position to where they can pursue endeavors that will be more constructive to society. Because if you have a group of people in society that are down on their luck, or they're distraught and they're very upset with their circumstances, it doesn't make for a productive society. And it also doesn't help people who are high performers in that society, because now you have, at least what's going on nowadays, at least with what it seems like there's class warfare and division that's happening, that is being perpetrated by people who are seemingly putting themselves outside of that scope. And if you don't believe me, go on Elon Musk's Twitter. Like, look at all the people that tweet him and they say horrible shit. He seems like a nice guy to me. Like, I mean, look, he's a hard ass. Like, I probably wouldn't want to work for him. I'm not going to lie. I love him. I love him as like an innovator. I think he's a lazy guy, but I probably wouldn't want to work for him, only because he seems very demanding.
Right, you're lazy.
I've heard stories that, people who work for him, like someone will take off because, there was one guy who took off because his wife had a kid, and then he wasn't in work the next day. And then Elon emailed him and was like, this, what we're doing at this company is really important. Like, you can't be taken off. I don't care if your wife had a kid or whatever. And like, that kind of rubs me the wrong way. But at the same time, like, I respect the grind, like anyone who's a high performer like that and has high demands of everyone. And he's a leader. He's not a boss. Like, the difference between a boss and a leader is kind of like, a boss will tell you what to do. A leader will do it with you. So like, he's busting his ass. Like, he's infamously known for working 80, 90-hour weeks, sleeping on the couch in the office. I think when they were really making a big push to get Model 3 production out during the early stages of Tesla's profitability, right, he was sleeping on the factory floor. Like, this dude's a fucking savage. Like, this guy's a fucking dog. Then I saw, what was it, Grimes says that he lives like he's a hermit and lives in like a $50,000 house. And remember, the mattress was all fucked up on her side and he wouldn't buy a new mattress. He put himself in that mindset of like, even though he's a billionaire, he sold all of his possessions. Like, he lives like a hermit, kind of. He was living in the SpaceX factory for quite some time. And like, the reason he does that is because he wants to put himself mentally in that position to where he was when he started Zip 2, right? And him and Kimball, they were living out of that office. They rented an office space for their business. He was sleeping on the floor and sleeping on the couch in that office, and he's putting himself in that mindset of like, I got to make this work, otherwise, it's the end of me. So I respect his like grind as far as that's concerned, because I think that you see a lot of people get complacent. I think Bezos is pretty fucking complacent. He built Amazon, he did a lot of good in that respect, could do more. But I think that he's very lazy now and he doesn't really give a shit. And that seems to be the case because he's spending more time on his yacht and not really innovating and kind of leaving everything with Amazon for Andy Jassy to run, who's a phenomenal early Amazon employee. A lot of cool shit about him. But back to real estate, though. So the main point was, getting off topic here, but this is all stuff that's very interesting to talk about. And I know you guys like listening to this. But so this appreciation was the main one. Second is cash flow, of course, monthly income coming in, of course. The third thing is equity. So the value, and that ties back into appreciation, but more so like you take out a mortgage, like 30-year mortgage, 15-year mortgage, whatever. You're making monthly payments towards the mortgage, which is then going to increase your position, your equity holding in the house. So in that sense, we would call that mortgage pay down. And we'd also call that like equity buildup. Just through the progression of time and making your payments by using the base. Like, if your cash flow is $3,000 a month and you have a $2,500 a month mortgage payment, you're putting $2,500 of the $3,000 coming in. So you're left with $500 left over. And then you have all your write-offs, depreciation, CapEx, mortgage interest, property taxes, things like that. You could write off and offset against the 500. You in all likelihood wouldn't pay taxes on that because of the depreciation itself is going to create a situation where you actually get a tax break, which leads into my next point, which is the potential tax breaks. And these are all things that you, for the most part, miss out on if you own a property outright and you take Dave Ramsey's advice in a sense of like just buying the properties in cash, which, again, if you live in California, good luck. If you live in California and you could save up enough money to buy your house in cash, let me know. Let me know. Seriously, I'll give you $1,000. Like, it's not going to happen. If you live in New York and you want to fucking buy and I'm saying that figuratively, obviously, that do not take me up on that because I will not pay you, because the odds are if you could buy your house in cash in New York or California, you're probably from a pretty well-off background or you're like super high income earner to where you could do that. But for the majority of people, like 99% of people will not make enough money a year to even be able to buy a house in cash within, I don't know, the next 10 or 15 years, right, God? Like, the average person in New York's making what? Like, let's say you make 100K a year. Like, by the time you save enough money up, the home values will like have doubled, right? Or like close to doubled, at least in New York and California. That's been the trend, right?
Right. You're going to keep chasing the home price. You're never going to be able to buy a home. As you keep earning more money, the home price is going to keep going up and up and up. And then you're going to be wasting money on rent that you're not even going to get a return on appreciation on. So you're going to be paying people, say, I don't know, $2,000, $2,200 a month on rent. That's wasted money that you're not going to capture on any kind of resale. And then you're not even going to get the benefit of the $500,000 in free capital gains that you get when you sell a home. So
and just to point this out, because a lot of people aren't too privy to this. So this is a really good point. I'm glad you brought this up. So as far as tax situations, if I live in a property, right, and let's say it's a triplex or a duplex for the sake of argument, right? So I live in a triplex or duplex. God lives in one of the other units, and I have Joe Mama. Joe Mama is my third tenant. Okay, we have my second tenant. We have a triplex. I live in one unit. God lives in one, and then Joe Mama lives in the other.
Wait, you know who lives in the other unit?
Oh,
Wait, listen. This is the guy that lives in the other unit. Okay, right? You ready?
I'm ready.
Can you hear that?
Yep, Jeffrey Bezos. All right, so all right, let's pause this now. Come on, let's get serious here. So I have a triplex. I have 2 people in the other units. I live in one of them. So the situation is, as long as I live there, and that's my primary residence for at least 5 years, I could turn around and sell the property. So as a single filer, in my case, I would be able to exclude $250,000 in gains, which is phenomenal. That's big time. And if you're married, it goes up to 500,000. So that's what God was previously alluding to. That's a major tax break for homeowners who live in a property and they sell it. It's a very good way to cash out and not have to pay Uncle Sam anything. So it's it's actually very common, but too many people don't know about it, particularly in the younger generations, millennials and Gen Z. These are things that you got to think about with home ownership. Another thing too, like we said, it's pretty much impossible to buy a home in cash. And if you do, and you compare the returns to, say, the stock market, you're way better off in the stock market. Like, for the majority of homeowners across the United States, like, their homes really don't appreciate in value. Like, if you look at areas outside of, like I said, the coastal cities, like if you look at, I don't know, Idaho, Utah, anywhere in like the Rust Belt, those home values are not really appreciating unless you're doing major construction and you really kind of become like a real.
But you don't need appreciation because the cap rates are higher. So you don't need no appreciation in Idaho or Ohio because
exactly. And how I look at appreciation is the cherry on top, right? You really should be buying properties for the cash flow. You have to look at the cap rate. So he brings up cap rates, which is another phenomenal thing. Exactly. Cash flow. That's by the way, I don't know if you guys ever heard this song, Cash Flow by Ace Hood. I love that fucking song. He's like, cash flow, I need it on time. I'm talking back roll. That's like fucking Grant Cardone's theme song. But no, anyway, so the cash flow is like the main reason you get into real estate. And then the tax breaks is probably the second biggest reason, because it really is like, once you use leverage to get into real estate, it really is such an incredible tax shelter. And the barrier to entry for real estate is obviously greater than stocks, right? Like, we're in a weird situation where like you could buy fractional shares in companies, which is kind of nuts. But for like $1,000 or $2,000, like you could become a shareholder in like pretty much every major American company, like even Amazon. I saw split. What was that, like a 20-1 split? I saw that, it was like 2 weeks ago.
I mean, you got real estate syndicates too. When you got what's that other that there's this platform that you can buy real estate on. But yeah, they charge exorbitant fees.
Crowd something, right?
Yeah, something like it's like a real estate platform.
What is that called? It's similar to like Lending Club, kind of, right?
Well, no, it's like you buy actual houses on the platform. You buy like a percentage of it. Oh, Fundrise, that's what it is.
Fundrise, yes.
But the fees are ridiculous. I think there's like a 2% fee, and then there's like a $500 advisory fee. And then there's like management fees and etc. And it's like they're diluting away your whole returns.
Yeah, and Fundrise, the shares that you buy in these homes, they're not really liquid because it's not on like a market like, the New York Stock Exchange or the NASDAQ. So it is a little tough to sell them.
Well,
that's in the prospectus
in the beginning. It wasn't really that liquid, but they actually improved like their liquidity because they have like a set amount of cash aside. And they use that to buy back shares if you want to sell them. So like Fundrise will buy back your shares to create liquidity in the market. But when they first started, like I think it was in like around 2011, 2010, like it wasn't liquid at all. Now at least you get some sort of liquidity. But like they only promise to buy back a certain percentage of the shares. So like if you're not if you don't make the cut, then you're gonna have no liquidity for your shares.
And it's interesting that you bring that up because liquidity is everything in that market. But at the same time, like, what's to stop you from just like buying a REIT, like if you really want to get into like that residential real estate space, which is booming right now, like just buy a REIT. Like you'll have more exposure to properties and you'll be in a more liquid market, right?
So people always go, REIT, it's a piece of paper. It's actually the best instrument to use, a REIT. People like to go like, oh, it's a piece of paper. That's what people always say, like Grant Cardone and everyone. Oh, it's a piece of paper. It's a piece of paper. But like it's the most liquid instrument. You're not paying an exorbitant amount of advisory fees because these REITs have like massive scale, and you're getting into like some of the best deals. Some of these managers are like some of the best real estate investors in the world.
Absolutely, and they manage. Whoa, hello.
Yeah.
All right. There's some weird echo. You hear that?
No, I didn't hear anything. But what were you saying?
Oh, okay. I was gonna say that there are some major REIT investors and large companies. I think the one downside I'd say with REITs is that they're not as quick to pull the trigger and kind of work on deals as they should be. But that just comes with red tape with most corporations, right?
Pretty fast. I mean,
oh no, they do. But I'm just saying a lot of these other REITs, like there's a lot of red tape that comes with being a big company, and this is just a main problem with corporations in general. I know we spoke about this a little bit in the past, but and I always believe inherently most large corporations are like mismanaged, or at least they're not running at optimal efficiency. So that's where a guy like, Carl Icahn will step in, or Bill Ackman, or David Einhorn, like any of these other big major activist investors. That's kind of where they make their bread and butter. Like they step into companies that are traditionally well run, but maybe they go through a period where they have incompetent management, and they kind of look to shake up the board and put their own guys in that will help bring the company back to, number one rule, which is profitability. And how do we get there? And how do we become more profitable? How do we trim the fat,
Right. It's not all about revenue growth. It's about profitability.
Right. And so just back to this crypto, because we did go on a big real estate tangent here, and real estate's great. We'll do a dedicated episode to real estate. I could talk about that till I'm blue in the face, and I could give you some more tips and tricks regarding different tax breaks and different, viable investment methods for real estate, and what to look for in a deal specifically. But going back to God, you're right.
Yep.
All right. Can you go on mute for when we're talking? I think that's like probably a good move. Yeah, there's like some weird feedback glitch going on. We haven't had that in the past. So when we're done talking, like you'll know, you won't hear it really anymore. But there was this weird feedback thing going on. Anyway, I digress. But back to like Dave Ramsey. So Dave Ramsey, like this segment, there are so many problems with it. So we played out this segment. God was talking like throughout the segment. I really tried to like kind of hold back until the end. But if you looked at the timeline of like the coins that first of all, the coins that he's comparing, it's based on this TikTok, and the timelines aren't even accurate, right? He opens up, he compares something from November to what it is in January. Keep in mind, this video was recently posted. This video was posted March 21st, which means in all likelihood, the segment is from March, right? I would hope that you're not uploading videos that are over 30, with the content's over 30 days old. Otherwise, Dave Ramsey should really fire his social media team and YouTube team. Otherwise, I can't imagine. They have cameras in the studio. They're ripping audio and visual at the same time. There's hardly any editing that needs to happen. Like, just literally rip it out of the entire segment, like we do with our clips. Like we record our whole podcast segment, and then we listen back to it. We jot down timestamps, and we rip clips. Like there's a few clips that we'll probably take from each episode, probably about 2 or 3 clips from each podcast episode. And I'm sure that Dave Ramsey's team does the same thing. But nonetheless, the timelines aren't even the same. The timelines are the first thing that he talks about. He pulls something, I believe he says November to January. So it's like, okay, great. You're comparing 2 months. Like, wonderful. And I think this was the producer. Fire the producer. He's not even using the same timeline. Like, how are you going to compare? Okay, well, if I owned it for 2 months, then the stock went down or whatever. Like, that's not a long enough timeline to even justify, being down on a position. So he opens up. He's like, oh, from November to January, you're down on that coin. Okay. Then the next one that he compares, he says what is it, like a 5-month period, or he talked about Dogecoin, so it's like May to like January. So May is the fifth month of a year. Okay, so to January to December throughout, let's say the year end, that's 7. So to January, 8 months. So okay, you're comparing a 2-month period for one thing and then an 8-month period for another. Like, what's the deal with that? Why wouldn't you just have a more consistent timeline for comparison? And here's how silly they are. They don't realize this. When people do this, this is what's called a straw man argument. And when people do this, and actually it's really more of a false equivalency. And when people do that, you got them. there's an old school YouTuber I used to watch back in the day, and he used to call himself the puppet master. And he'd go, I got these bozos dancing. That's what he would say. He'd go dancing like a puppet on the strings. And, all the crypto people, like, they got Dave Ramsey doing mental gymnastics right now. Like, they're like, listen, bozo, you're dancing for me. I'm trolling the shit out of you. And it's fucking hilarious. But, how are you going to compare timelines that aren't even the same? And the other thing, too, is he's bringing up Dogecoin. He's bringing up all these garbage coins. Like, this is not, specifically financial advice, but, like, I can speak about what I invest in, and God could speak about what he invests in. And we believe in, we both have differing opinions on certain coins, right? That's what makes us unique. But the crux is still the same. We look for, number one, fixed cap. Anything with a fixed supply, we like because it's inherently deflationary and it's a good hedge against inflation by default. Obviously, crypto is a very new space. We both have differing opinions on portfolio allocation. I'm a little bit more on the conservative side. When you look at people who are investing in the crypto space, some people dedicated 100% of their portfolio. I'm not one of those guys. I'm not going to do that. Stocks have a long proven track record. Real estate has a long proven track record. I'm not going to deviate from two things that, literally are the best performing asset classes in the world. I'm not going to deviate from that. But crypto will account for a large percentage of my portfolio.
That's fake news, though. What you just said.
I'm sorry?
Fake news. You said real estate and stocks are the best performing asset classes in the world, as far as I'm concerned, right?
Well, long term meaning
over the past 10 years,
okay,
has a compounded annual growth rate of 164%. That's beats stocks by 17-fold.
I'm saying long term. I'm saying long term, and in the scale of at least 50 years or more. So crypto hasn't been around.
50 years is pretty long. That's about 1/8 of a person's life.
Okay, but I'm saying I'm not talking about crypto in a scale of like 10 years. I'm talking about best performing assets within the last 50 to 100 years. Like that's a long proven track record. Like that definitely matters.
Well,
but
let me challenge you on this.
Okay, so right? As far as
wait. What stock, right, has lasted from 1850 to today? Name one stock that has been around since 1850 and is still around today.
Well, that doesn't matter because you could just buy an index fund.
No. I want to. You said people have this like false equivalency that stocks always go up. So, what stock has lasted from 1850 to 2022 and then stood the test?
It doesn't matter about. First of all, I don't believe in individual investing in terms of stocks. I think everyone should just buy index funds and then call it even. I think individual investing is like prone to error, prone to human misjudgment, and I think you're putting a lot of trust in management to do the right thing and to not commit any sort of financial fraud, which when you look at the structure of compensation for a lot of people who are on these boards, they're almost incentivized to fudge numbers and to mislead the public and commit acts of financial fraud because there's little to no punishment and they get golden parachutes and they seem to be able to cash out after they falsify financial statements and earnings, even though there is a tight grip from the SEC. But now as far as like an individual stock, there's not really any one I can point to.
Wait.
Can give you one example.
But
I'm just saying over the.
I have another question.
Your point.
Give me one house that has been around since the 1500s.
America was only settled in 1613, so not in America.
I want to know a house that has lasted that long.
Since 1613?
Since the 1600s, a house that has lasted that long.
I mean, you have different areas like Salem, Massachusetts, which has like a lot of historical significance. The one thing I could think of that, like, at least as a house from like the 1700s, there's this house called the House of the Seven Gables in Salem, Massachusetts. But that's probably one of the oldest houses I could think of since like the 1700s. But if you really want to go into that, like the White House was obviously built in like the 1700s and then burnt down in the War of 1812, so rebuilt after that.
Right, so it hasn't lasted. So
right, as far as anyway, whatever. My point is not to debate the recent performance of crypto relative to these other traditional investments. It's more so to talk about how for the last
these assets, right, have
50 years, 100 years.
Have lasted.
Okay, name a cryptocurrency that has been around for 50 years. You can't. because the space only
Well, I'm
existed
telling
since
you, right?
2009.
That cryptocurrency will be the only thing that will stand the test of time. It will be around forever.
All right, that's a debatable opinion, but I will. That's a whole nother debate. But anyway, my point is this. Obviously, from what you could tell, me and God have differing opinions about crypto, and I'm not saying that I don't want it to be a part of my portfolio. To some people, I have a very aggressive, take on crypto and a aggressive allocation, and to some people, it's not enough. But what we're saying is this. This is the main crux. Like you could debate all this stuff if you want. Maybe we'll do this on another episode or at a different point. But crypto, the main reason we like it and the main things that we look for in coins, if you are wondering, we're looking for fixed supply. That's number one. That's the most important thing. We need things that are deflationary to move us away from particularly the US dollar or any sort of currency that's that undergoes like a massive wave of inflation, which is just excess money printing. That's number one. That's the number one thing we look for. So anything without a fixed supply, we're immediately ruling out. That includes Ethereum, that includes Dogecoin, that includes Shiba Inu, that includes fucking SafeMoon and fucking MILF coin and all these other wacky shit coins. That's number one. Number two, the thing we look at least this is my opinion, I look at utility. I want to see what is the use of case for what I'm
another thing
investing
too
in.
on the supply, it can't be like one fucking quintillion or one fucking septillion or some shit. Like it can't be a fixed supply that's extremely high. Not some
Right,
bullshit.
because at that point it might as well just be inflationary,
Exactly.
So another point is utility. I know that I value utility pretty high for cryptocurrencies. I want to see what is the use of case. So with Bitcoin, the case is that potentially it'll get to a point where transactions will be able to be processed on the network, which will be faster than credit card companies, and the fees associated with conducting those transactions will be substantially cheaper. Because when you think of credit card transactions, they're historically about 3%. With crypto, I can send money to God. Let's say $100 transaction. I actually can send money from my wallet to his for a lot less than 3%. And ideally, with the network operating at full capacity, it will be able to happen damn near instantaneously. So that's another main reason I like Bitcoin. But not to harp too much on that, but that's the second thing I look at is utility. Then the third thing I could give as a pointer, and this is just a general rule, anything with a small market cap or relatively small market cap, let's say less than $1 billion market cap, right? That's getting pushed by influencers, run for the fucking hills. Like if Lana Rhodes is promoting, if you know who that is, you know who that is. But if Lana Rhodes is promoting a coin, don't buy it. Just please don't. If Logan Paul is promoting Dink Doink or whatever the fuck it's called, don't buy it. If Jake Paul is promoting what was that stupid platform or whatever? That platform's horrible. I hate to say it, but what was that Jake Paul platform where he was like, "Oh, buy my thing on there"? It's such a shitty platform. They didn't even let you withdraw. What was that called? Do you remember that? God, so long ago, I don't remember.
Or the one that he had before his fights.
Yeah, the one that he was promoting, and I remember you told me about that off stream. You were like, "Hey, we need to buy this," and I was like, "There's no way to withdraw," and you were like, "What?" And I'm like, "Yeah, there's no way to withdraw if you buy on there." What was that called?
I don't even know what you're talking about.
What was that? BitClout? What was it called? Do you remember?
Oh, BitClout, yeah.
That's what it was. BitClout. I was right.
I didn't say to buy anything on there. I said to make an account because you get when you first made an account, you would get free these free social cloud tokens. So you might as well sign up and if it turns out to be something, then you have the tokens for free. I didn't put any money into it. I just took the free tokens that they give you on sign up.
Yeah, so some people, this is how ridiculous this is. So a bunch of people were promoting this BitClout thing or whatever, and it was in my opinion, allegedly, is one of the biggest scams ever because you were allowed to put money in, but you couldn't withdraw. So if you put $100 in, like, goodbye, you're not getting that 100 back. Like, use, which brings me to my next point, use trusted exchanges. That's another big one here, folks. New York has very good guidelines for what constitutes a financial institution and the regulation around that. So New York has a thing called a bit license, which means that basically these cryptocurrency companies are treated to the same scope as like banking institutions and other major financial institutions like private equity firms and hedge funds. So the whole idea is that they abide by KYC, which is know your customer laws, and AML, which is anti-money laundering laws. So the main reason why you want to focus in on that is that New York has the strictest financial regulation of any state, province, city in the world. So anything that falls within those guidelines and has a bit license is, in my opinion at least, a somewhat trustworthy institution. In addition to that, you also need to look at consumer reviews. That's big time. So this is not, we're not endorsed by anyone here, but two of the major exchanges that you could look towards, at least if in New York. If you're not in New York, again, you should still look at these institutions if they do a commerce in whatever region you live in. Coinbase, phenomenal. I think it's pretty much widely accepted that they're the number one exchange to buy cryptocurrency on. Very easy to buy stuff on there. The UI is great. And it's also very easy to move stuff off of that if you want to move it to cold storage, which some people endorse. And then Gemini is also very good too. The Winklevoss twins I think they actually were like the first exchange to get, I think Gemini was the first exchange to get a bit license. They seem to have been working very closely with regulators. They introduced their own stable coin, which is a pretty interesting thing to read about. Again, you got to do your own due diligence. We're not offering any financial advice here, but these are things that we look for. Now, we're not necessarily telling you that you have to look for them, before buying a cryptocurrency. But again, these are things that we look for, and it's things that make us better investors, and we kind of look at things through a scope. But really, I could tell you this, anything being endorsed by an influencer, and if you haven't heard of it before they tweeted about it or they put it on their Instagram story, don't do it. Just don't do it. It's not worth it. It's just a piece of crap. But speaking of cryptocurrencies, it seems that now like the whole world's coming together, and there's a lot of like different globalization that's going on. So it seems real odd. And I was reading something about this new innovation called WorldCoin, and I don't know too much about it, but I think God does. So I don't know if you want to speak on that, but I know you're a little bit more privy to that than me. This is all news to me, though. So
Yeah, so Sam Altman, who's basically the former founder of, I think he was the former president actually of Y Combinator, that venture capital like startup fund thing. He basically started this new cryptocurrency coin called WorldCoin, and he just recently raised $100 million in a token sale, and he got investors like Andreessen Horowitz and Sam Bankman-Fried, who's the founder of FTX, and a couple of other venture capitalists. I think actually Coinbase actually invested in it too. So basically, he started this cryptocurrency called WorldCoin, and so this is like a very interesting proposition of what he started. So basically, it's this coin where there's this orb. Basically, he wants to give everybody in the world this cryptocurrency. But the problem is, like, how do you prevent people from getting duplicates of a particular cryptocurrency? He invented this orb where it basically scans everybody's eyes, because basically everybody has different because of the capillaries or whatever in everybody's eyes. Basically, everybody's eyes are different, and they have different retinal displays. So you're basically using this orb to scan everybody's eyes. And as a reward for him scanning your eyes, you get this cryptocurrency called WorldCoin. So he's basically giving these orbs to I think they call them orb developers or whatever. So he's sending them out to all different areas. I think it's he basically sent it to Chile, Argentina, and a couple other places where he sent these coins. And these people are like signing up millions and millions I think they signed up basically like 10 million people already around the world for this WorldCoin thing, where they scan your eyes. And his idea is basically to it's to have like a universal basic income where everybody is basically allowed to is going to have a set amount of money each week, and he verifies it through basically their retinal scanning, which I think presents a couple of privacy concerns, where they have this data on your eyes, and what are they using this data for, and why do they need the scanning of your eyes? So like I think this is I don't know if I would sign up for this, or basically look into this orb and let them have a retinal scanning of my eye. I think it's very weird.
Yeah, I think that is something that's really interesting, and it seems that finally, people are coming around to these really weird like privacy concerns arising with companies. Right, we see that with Facebook. A lot of people moved away from Facebook, and now we're seeing that consumers are putting big tech companies under a lot of pressure to. I say Facebook, but really, Meta. Right, they rebranded. It seems like now a lot of these big tech companies are under fire to like finally take control of privacy issues that have been going on with companies. Like Apple cracked right down on Facebook, right? They stopped targeted ads. That's what it was. And that negatively impacted the stock and just destroyed Facebook's advertising revenue.
Yeah, that's true. So the problem I see with this is we see with this coin is too. Like I guess it does present a valid security measure where you can only open your wallet if with your the retinal scanning of your eye, because basically if you look at twins or whatever, they have the same DNA, but twins don't have the same retinal scans. So basically it's a way to protect it. It's a good technology that's basically a way to protect your cryptocurrency. But I think there's different measures that can be put in place basically to have your crypto protected. You could basically have it secured in one of those vaults. I think that's in Switzerland. It's in the mountains. You could basically invent a blood device where it only opens with your blood, or basically you have to basically give it a piece of hair or another piece of DNA for it to open. I don't think this scanning is a viable technology. I think it's actually going to present more harm than it does good.
I'm not a conspiracy theorist, okay? But let's say I am, for the sake of this example, of course. To me, it seems that the offering of universal basic income and then access to that universal basic income in the form of like retinal scanning and collecting people's DNA, it just seems like they're basically, I could be wrong. Like I said, hypothetical conspiracy theorist in this example. If I was a conspiracy theorist, I would kind of think, okay, they're essentially paying people for their DNA, right? Like, is that fair to say?
Yeah.
And another thing too, like I've always again, hypothetical conspiracy theory example. There are some people who think like 23andMe and all these ancestry.com and all these other companies that collect your DNA, like what are they doing with it? They're obviously not destroying it after the fact, right? Like how do you, and even if
I would say probably get sent to
so,
police agencies, or like I would say probably get stored. I wouldn't doubt that.
I mean, if I was a local police department and, someone, whether or not they're an offender or not, like you have their information, you have their date of birth, you have all their genetic information,
right. You're
you have
expanding
all
your
their
database in case they commit a
samples,
crime
like
in the future.
put it into the database before they even commit a crime. And then like now a guy commits a crime and let's say, or there are fingerprints on a gun and you don't really have any leads of like who to investigate, or you don't have any camera footage, you could just run through the database and see whose fingerprints they are before like even interrogating anyone. And you'll be able to figure it out like that. Cause you go, oh, we have a match we have a 100% match of those fingerprints in our database because that guy took a DNA test or whatever the case may be, or he like scanned his thumb. Like there's no way that I find it very hard to believe that, these companies aren't turning over this like very sensitive DNA information over to other law enforcement agencies or governmental agencies.
These orb operators are actually making like a shit ton of money, and they're like in these poor countries like Nigeria, Chile, etc. they're signing up. They have like basically a group of people, and they do like 24-hour shifts, and they're signing up like 10,000 people a week. And they're saying some of these orb operators are making like $500,000 a year in these poor ass countries like Chile and Argentina, which is fucking crazy. But I mean, I guess that's the location you want to go to if you want to basically have the most easy way to collect this data. Like if you have orb operators in the United States, I think they would be more hesitant to basically scan their eyes to get a cryptocurrency. But if you go to a poor country where people are starving and they can't get food, they'd be more open to it.
Of course, because their DNA to them doesn't mean anything, right? Like the main thing that matters to you if you live in a poverty-stricken country or a country that doesn't have adequate access to food, water, and shelter, like your main goal is like, where's my next meal coming from? Like, where am I going to spend the night, right? And how can I put myself or my family in that position to be able to have readily available access to food, water, and adequate shelter? So, if you sell your data or you sell your information, you're just like, woohoo, like this is good. I'm getting paid for something that doesn't really require too much extra effort on my part, and I'll be able to provide for my family. And these are people who have obviously very limited options.
I was reading
right?
the white paper. Supposedly they're only going to store your data for 2 years while they basically work on the technology to basically develop the retinal scanning, and then they're not going to store your data anymore. Once it's in the system, they're going to like delete it. But I don't know how true that is. Every time I hear companies say like, oh, we don't store your data, we don't keep it on in our servers, maybe about 6, 7, 8, 9, 10 years later, there is a privacy lawsuit, and they basically pay a huge sum of money because they basically did end up storing your data. Like Snapchat, they said, oh, we don't store your pictures on our data center or our clouds. Then they've got found out later on, oh, they do store your pictures on there. There's tons of companies that say they don't do it, and then they basically get discovered that they do it.
Right. Well, how do you think? Here's another main thing that you got to think about, folks, with technology. Any sort of service that's offered to you for free. Think about it. How do you think they're making money? Like, I don't know if you saw the Social Dilemma on Netflix. I highly recommend it if you haven't seen it. But you are the product, like God just said. Like Facebook is a free-to-use service. Instagram, free-to-use service. Snapchat, free-to-use service. Like, how do you think these companies have like multi-billion-dollar, or in like Facebook's case, multi-hundred-billion-dollar valuations? Like, how do you think they make money? They're selling your information, and they're targeting you through the form of advertisers. They're straight up selling your information to data banks. Remember that whole Cambridge Analytica scandal? They literally were collecting Facebook user information and compiling it in a database and sending it out to a third party. And the third party had all of your information.
Of course, everything you search on the internet is being collected as cookies. You're being tracked. Your data is being stored. You can't do anything in basically private anymore. If you don't think you're being tracked, then there's something wrong with you. Data is like one of the most valuable commodities in today's world. Like it's like data and time.
Yeah, the common expression is that data is the new oil, or data is the new gold, and I totally agree with it, because if you have readily available access to like data, so if I know every single thing that you search up and and what your tendencies are in terms of looking things up and like purchase history, like, oh my God, you know how insanely valuable that is? You literally can use, in that sense, like you could say, okay, someone goes on Amazon and they buy something on a recurring basis, like 80% of the time that they click on it. So like I can run ads for that thing, targeted ads towards you. And because of that, we can like subconsciously convince you to buy that thing just through targeted ad use.
Right.
So,
just lower the price, $1. If you know someone's buying tissue paper or whatever for $3.50, if you can, then you just basically get it produced for $3.25 and you target an ad towards them.
Exactly. You can appeal to human psychology in the same way that casinos do. And in a sense, it is very predatory, and it's obviously an invasion of privacy. But you can appeal to people in the same way that a casino does, where you draw people in, and you can create an environment that's like very addictive, and it'll just pull people in. And obviously, like very unethical, but that's a major concern for people, obviously, with all the privacy violations going on. I mean, it's very scary, and people are finally waking up to it. Crypto is a new space, and we both really love crypto, but there's going to be some bad actors. And I don't mean bad actors as in, you go and you see a film and the guy acting in the movie sucks. I mean bad actors as in people who have malicious intent, like going and doing things within the crypto space. I think the main focus is like kind of look at how crypto started and look at the roots. The roots of it are the roots of crypto and the crux of crypto in general, where it started, like we said earlier, to create an alternative financial system, not to necessarily compete, but just to have an alternative, right? Like that's the whole point of capitalism, is to give you options and to provide alternative avenues of different, just create a marketplace of competition. And they essentially wanted to create a marketplace of competition in the realm of currency. And that's what cryptocurrency and Bitcoin more specifically came from. And I think that you're going to see that there are a lot of people who kind of err on the side of caution when it comes to that. But it's just such a fascinating thing that's going on. But as far as WorldCoin, like, I don't know how I feel about universal basic income. I think that there, unfortunately, is a large portion of the population that when their basic needs are met, there's not really going to be much motivation to progress further beyond that. I think a lot of people, unfortunately, become complacent. I don't think we are necessarily. I know I am, and I know God isn't. So, because our basic needs are met, and we're still looking to improve and innovate in other areas, but that's just kind of how we, get motivation. And
Well, my
we
basic
look
need,
to-
right, is I basically need a yacht and a private plane. My basic needs haven't been met yet.
Yeah, my basic needs are well, also another thing too is and I guess this is something we could talk about a little bit here, not to drone on, but and to get really like preachy, but like, you hear a lot of people talk about passion in today's day and age, and you see it a lot on social media, and if you're on LinkedIn or any other sort of social
My
network.
passion. I want to be an actor.
Yeah, so passion, I can't stand that friggin' word. Like I really can't stand it. Someone had a really good opinion on this, and I'll just kind of parrot what they said. I forgot who said this, but I saw it quite some time back. But I watch a lot of stuff online, and I try to, like we said, I said before, intake as much information as possible from various different sources. So it's hard to keep tabs on everything. I watch a lot. I'm very active online. I watch a lot of different things. But someone had the opinion of like, and I totally agree with it. They were like, passion sucks. I don't like passion. That was the take, right? And the whole point is like the person was like, oh, I don't have passion, I have purpose. And the whole point was like, purpose is you're serving a power that's greater than yourself. Like you're serving your community, or like you're serving your
serving
loved
me.
ones. You're serving your friends. And passion is like self-fulfilling. Like when you think about passion, people say my passion, like me. I want to do this. I want to do that. I want to, like God said, oh, I want to be an actor. Oh, I want to do this. My passion, my passion, my passion. That's what they say. And purpose is like you're serving people. I'm going to go out and I'm going to teach people about financial education. I'm going to offer my opinions on financial education because I think it creates a better society as a whole. It will actually benefit everyone, financially, right? Because if people are more financially literate and they're not investing money they can't afford to lose, when you think about it, there won't be panic selling, right? That's a big thing that will come from increased financial literacy, right? Because how many people are invested in cryptocurrency or in the stock market or in real estate, and they're investing money that they can't really afford to lose? It's quite a bit of people that fall into that demographic that I'm talking about, right? If you're 80 years old, and unless you have a large amount of discretionary income, you probably shouldn't US equities. You probably should be a nice healthy mix of bonds or whatever the case may be. There are some people who can tolerate that risk, but there was one gentleman in particular I remember talking to him. I won't say his name. Let's call him Jim for the sake of the conversation. But an older gentleman who I did happen to work with, and I was talking to him about investing in particularly the stock market, and he was explaining to me how he had a broker and he was, for the most part, in equities, and he was an older fellow that was closer to retirement, and this was after COVID hit. And I couldn't believe it. I was just sitting there. I'm thinking like, okay, this is a guy, nice guy, but like he doesn't a nice guy, but like that when you're talking to someone, and there are a lot of people that are like low key millionaires or like very wealthy, and you wouldn't really know. The way he was talking about his situation was like, he was kind of banking on Social Security, banking on other stuff coming in. And he's just talking to me, and he's like actively trading equities. He's listening to Jim Cramer. Big mistake. Listening to Jim Cramer for daily advice, hyping him up, telling me that I should watch Jim Cramer for investment advice. He's like, this guy's also pumping shit that he was invested in. And I'm just like, okay, this guy's just like a walking like disaster when it comes to investing. Like, holy crap. He's actively investing. He's 90% equities in his watch Jim Cramer. Like, I don't want that. No thanks. I'll stick to my boring index funds. I'll take my, annualized 7% a year return adjusted for dividends reinvested in inflation. And then I'll work on other areas where active businesses where I can get a better return, or I'll focus my time to real estate too and like build up other streams. So, that's kind of my take on it. But, these are people like I said, there are a lot of people that aren't really financially literate doing things that they really shouldn't be doing. And God, I wonder if you have any opinion on that, because I know that that's something that you feel very strongly about as well.
All right, you're not supposed to be doing right what you're passionate about. Oh, I had passion. Yeah, baloney. Who cares about your passion? Well, I could give two shits about your passion. You do what you're good at. You don't do what you're passionate about. If you have passion to be a football player, but you're fucking 3'1" and you weigh 10 pounds, then you're not going to be a professional football player. If you have passion to be an actor, but you look like the fucking Grinch, you're not going to be an actor. If you have passion to be a model, but you weigh 900 pounds, you're not going to be a model. Oh, wait, maybe you'll be a plus size model. Maybe it'll work out for you. If you had passion to be I don't know, you have passion to basically design clothing, but you look like Raggedy McGee. You're not gonna basically be able to design clothing and be a fashion designer. You do what you're good at. You don't do what you're passionate about. Right? This isn't fucking dreamland. Oh, my passion. I must follow my passion. Oh my God, it's in my mind. My passion. Yeah, bullshit. Do what you're good at. Make the money. Retire. Basically, then you'll have a nest egg, and you'll be able to support yourself. Then once you have the money and you can support yourself, then you worry about your passion. You don't worry about your passion up front. You worry about your passion once you basically have yourself established.
Great point. And I'll say this too. We love doing the show, right? And we're doing the show. And when it first started, we started it with the intent to have fun and to educate people as well. We want it to be entertaining and educational. But at the same time, we have to be able to make a fucking living. We can't do the show full time, right? And to be completely honest with you, there's no reason to do the show full time and to work on the show as many hours as we would at our full-time jobs and our full-time careers, because we wouldn't have stuff to talk about. There's too much stuff going on that we actually would not have. I mean, rather, there is a lot going on in the world, but there's not anywhere near 40 hours of content to talk about. Like, the main thing that you got to focus on is focus on your career, focus on developing marketable skills, focus on developing networking, focus on developing, more specifically, connections that will help you in your career, and use your free time as like the creative outlet. And as far as your career, like, there are a lot of people that sadly they don't work in fields, or like they don't work jobs that they like. And it's unfortunate that they're in those positions, but definitely like maximize your free time. I don't want to get too far into my personal life here, but I have people who are in my circle, and they're still kind of figuring things out, and they're trying to find out what they want to do. And it's just like, I totally get where they're coming from, and I encourage them. I'm like, dude, instead of using your free time to hang out and procrastinate, like, try to find other areas to like work on things and to figure out what your interests are.
But I want to hang, right? I want to drink a 6-pack, go down to the beach, catch some Z's.
There's nothing wrong with taking a day to yourself or taking a nice trip and kind of relaxing, but I'm the type of guy, and it's definitely something like I need to go to therapy for or talk to someone about, because it's not healthy. But I'm the guy that, like, when I'm on vacation, by the start of day 3, I'm ready to go home. Like, I can't do it. I got to find something to do. I got to be productive. You know, I try to lead a healthy life as much as I can. I did eat like shit today. I had fucking Popeyes, which that spicy chicken sandwich was banging. But, you know, I try to have smoothies every day. I try to take vitamins every day. I exercise every day in the form of running 6 miles or lifting, or I have a rowing machine or rowing. So, you know, that's kind of how I try to do it. But in terms of an off day, like tomorrow, I'll probably have an off day. But bare minimum, I'm working on our show. I'm working on the podcast. I'm exercising. I'm working on some other things that come up. And then maybe I'll build like a quarter of a day into time for leisure. But I think the main thing in terms of sustainability is like you need to have your free time can't be dedicated to doing things that involve wasting a giant amount of your resources. Your resources are time, your resources are money, your resources are like the relationships you have with other people. You got to use your time wisely. Like you could go out and you could have a fun night out with your friends. You're at the bar and you're drinking. But guess what? If you go too hard in the fucking paint that night, you're going to wake up, you're going to feel like shit the next day, and it's going to stunt you for the rest of that next day.
Well, you're going to hit your head on the sidewalk, right? And then wake up in a hospital? That's what's going to happen, right?
What?
You're going to hit your head on the sidewalk and then wake up in a hospital. That's what's going to happen when you drink too much.
Yeah, that happens to a lot of people. A lot of people, they go, like I said, they go too hard in the paint, and then now they're fucked up for the next day, you know? So you have to be cognizant, and you have to make sure that you don't put yourself in that position. So, you know, it's crazy. And I think everyone's been there. Everyone's had times where, like, you go a little too hard in the paint, but at the same time, it's like you need stuff like that to happen. You need some form of, like, situation that comes up that's adverse that you deal with in that sense, whether it's self-inflicted or not. You need like an adverse situation like that to come up, because then it just reminds you that, you know, you can't do that all the time, and you really shouldn't make a habit of doing that all the time. And you should kind of focus more on trying to do both, like make time to have fun and play games and fuck around, and also be able to like enjoy your life a little. But you also have to make time to work. So, and really your free time, like you should be using it wisely. You should be using it for professional development. You should be using it to build a healthier lifestyle and to build stuff that's more sustainable. And again, creative outlets, things that you could work on that even necessarily, like we do this show, like, you know, we both feel very strongly about finance. We could both talk about finance until we're blue in the face. So it works for us. Like, I'm sure that if you're listening to this, there's something that you're passionate about that you want to work on, and maybe you're not working on it. Well, you should. And really the whole point is like, don't even worry about making a plan. Like that's another thing people kind of get a little too preoccupied with as well. They focus on making a plan for everything. They try to plan their whole lives out. You know, there's this Mike Tyson quote that's so cliche, but it's so true. It's like everyone has a plan until they get punched in the face or whatever. And it's honestly the truth. Like you can't live your life saying, oh, I'm going to plan to do this, I'm going to plan to do that. Like, no, if whatever you want to do, if you want to work on it, dedicate some of your free time to working on it. Make the free time to work on it and just start today. So like if you want to make a YouTube channel or like you want to make a TikTok, make the fucking TikTok and get to work. Start using your free time and think about it from first principles, which I love. Elon Musk talks about this quite a bit. And first principles is just like, okay, take what you want to do and boil it down to like, what are the steps you can take today that will ensure that you're actively working to achieve the goal that you set out. So like a YouTube channel. Okay, well, I want to think about it like this. Someone's goal could be, I want to be big on TikTok or I want to be big on YouTube, right? Okay, well, how do you get big on YouTube or TikTok? Well, first you have to make a channel. So like, okay, let's make the channel. Next, you need content. Okay, the other thing you need to do is like, you need to figure out SEO, search engine optimization, so that your videos get recommended. Okay, well, then what else happens with that? Oh, well, you need quality videos, right? So to make quality videos, you need editing software. You need a understanding of editing software. You need to have content and scripts for the content that you want to deliver. Okay, well, what else is a part of making quality videos in terms of like the analytical side? Oh, well, you need good retention, right? You need good retention and you need good SEO so your videos get recommended to more people. And that's like what it boils down to. Like you have to look at everything from that on a granular level. And speaking just about like YouTube and things like that in general, I don't know if you saw this, God, but Graham Stephan posted a video recently on one of his channels, and he was talking about how It was this whole Graham Stephan After Hours channel for a little while. We like Graham Stephan. For those of you who don't know, I'll give a little background here. This is the financial YouTuber. He made a lot of videos back in 2017, 2018, really blowing up in 2018, 2019. And he talked a lot about real estate. That was his bread and butter. That's how he came to make money on YouTube. And that's what he spoke about mostly in the very beginning. But it just seems that he lost a lot of passion for making videos. Particularly, he made the family channel, which he rebranded to like Graham Stephan After Hours. And it's kind of like a behind the scenes thing. So I'm curious to hear what you think about this, God. Like, did you hear about this at all, or is this kind of new to you? Or
No, I haven't heard about it. What happened with Graham Stephan?
yeah, so he had this vlog channel. It was called This the Family, and he was filming and posting vlogs once a week. If you don't know, he has an assistant, and then he's got an editor. And he recently announced that he's completely ending this he's ending like weekly or daily uploads to this channel. And it's just interesting stuff because he cites like different reasons, which I'll play the video and you guys will hear this, and I'm curious to hear your opinion on this, but it's just fascinating stuff. So here we go. It's called Why I Stopped Posting What Happened, and it's on Graham Stephan's After Hours channel with, at today's date, 62,000 subscribers. So let's hear what he has to say about this.
I've just been too overwhelmed with everything else to think about posting on this channel as well on any sort of consistent schedule. I mean, all of this started really about
You could hear it, right?
when Jack was living here at the house. Alex was just hired on, and because all of us together working from home 5 to 6 days a week, I thought it would be really easy just to vlog us throughout the day and then just post it as a once a week video. So, I mean, that in the beginning, it went well, but after some time, I realized that it was very repetitive, and it felt like we had to go and do things to make the vlog interesting, because just doing titles and thumbnails every day, or like brainstorming topics, or, you know, just everything, it wasn't that exciting. So we tried to spice things up by doing videos like taste testing generic versus other foods, or like just doing stuff. And it felt like a chore. I didn't like a lot of the topics that we were posting. I felt like, you know, if I get an afternoon off, it's a luxury. Like, to have a full day where I don't do anything, it's like, that doesn't happen. There's almost never a day where I have a full day off just not to think.
And these are adults.
Those days, it was like, well, that's our day off. We have to film for this vlog channel, the Stiff Family. And I was like, oh, man, but I would do it. And every week, I did not like his videos at all. So when I was telling Alex, I'm like, hey, if we want to actually do something with this channel, we got to figure out something else, and we got to post twice a week. And when Alex was like, well, you know, I'm not really sure if we have the time to do that, I took that as a challenge. I'm like, I'm going to show everybody that you could do it. If you put your mind to something, you can make it happen. So for an entire month, I posted 3 videos a week here on the channel. And I enjoyed it, honestly. At the very beginning, it was different, it was new, and it was fun. But after a month of doing that, 3 videos a week, mentally, I couldn't handle it. I'll be honest with you. Posting and thinking about something else just zapped my mind. I mean, the way I feel like I work sometimes is I have so many different things going on that it's hard for me to retain information, and it's really hard for me to focus on almost anything because I have so many other things going on in my mind that throwing one more thing onto that, it's like I'm juggling a whole bunch of plates, but throwing that one extra plate on there was going to cause everything else just to topple over, because I mentally, I couldn't do it. I could not think of another video, could not think about posting another title, thumbnail, anything. And it was at that point that I realized I'm stressing myself out. I'm getting like just anxious about like having to post another video. At this point, I was posting like 11 videos a week across 5 channels. And
so I think that's a good place to stop for the clip.
Well, the problem with him is, right, he said, oh, I can't think about another thing. I can't do this. I can't do that. Too many can'ts. That's number one. Number 2 is, right, why is he thinking about this? This should be outsourced to the guy Alex or the guy Jack, whatever, and he shouldn't even do anything. They should walk around with a camera. They should edit it, and they should post the video, and he should do no thinking at all. And that alleviates the stress. He wants to do everything himself. That's the problem. And he keeps adding work and adding work and adding work. And eventually you reach your breaking point. You can't just keep working and adding more to your work, but you have to outsource and you have to add employees to the team. And he doesn't want to add any employees to the team. He wants to be like a solo show. And what gets you to be a millionaire is not going to get you to be a billionaire. And he's got to learn that he needs to hire employees, he needs to outsource, and he needs to work more efficiently instead of sitting around and doing all this thinking about nonsense. Don't think about what goes on the channel. Give someone else a responsibility. Let them post it. And then if they fuck up, you deal with it later. And you tell them you fucked up, right? That's strike one. And you give them 2 more strikes. And if they keep fucking up, then you get somebody else in there to worry about it. But he just quit because it's too much mental stress. He needs to learn how to outsource.
I totally agree. And there's this awesome quote from John D. Rockefeller. I'm sure you've seen it, where he says, I don't remember the exact quote, so I'll paraphrase it. But he basically says, it's better to reap the efforts of 1% of 100 people than 100% of your own. So he's basically saying that, like, you have to leverage the talents of other people and like build up an employee base so that you could scale your business. And he was basically saying that if you don't do that, it's hard to become rich, because then you're just like, especially in like an entrepreneurial field like YouTube. I mean, Graham Stephan is an entrepreneur, like however you look at it. Especially with YouTube specifically, and like some of the other side ventures he has, like, yeah, YouTube is good, but like at the same time, like you said, you need other people working for you. There's no reason why there's no reason why he shouldn't have a vlog channel, like just filming and whatever. Okay, ready? Take the camera, film it selfie style. You don't even have to have like a crazy camera, like a DSLR or whatever, right? So people who don't know, like a DSLR is like a very fancy, like YouTube camera. It's like one of the most commonly cameras owned by big name YouTubers and aspiring YouTubers. It's like a $400 or $500 camera. Like, you really don't even need that. The iPhone cameras are so good that you could get away with using an iPhone camera and just filming like selfie style. As long as you have enough memory storage on that device, film for like an hour or 2, maybe 3 hours. And in his case specifically, he wants to go on trips. He cites that he has this big, and I'm talking about Graham Stephan, of course. He cites that he wants to go on these massive trips and like go on vacations. Okay, so go on these vacations, film for like, I don't know, 2 hours or 3 hours of the day. Don't film the entire day. That's a little freaking ridiculous. Film for like 2 or 3 hours of the day of like what you think is the most exciting thing that other people would want to see, right? So don't film yourself sitting in your hotel room before you go to bed, or like don't film yourself in the morning if you know you're groggy and you're not going to have the energy that's going to draw people in. But if like you're going to a water park or whatever, or you're going to the beach and like you're going to ride jet skis or do something really cool, film that part of it, film that aspect of the day. And then what you do is you have it 3 hours, whatever, you upload it to a Google Drive, or you send it to the editor, and then let the editor parse through it and pull out the most engaging parts. And then boom, that's your video. Like, to have someone else do that is not complicated. And as far as I'm concerned, like, I do the bulk of editing for the show. And it's just like, and that's just because of the background that I have, where like with, other ventures, like I kind of taught myself how to edit, but like editing is not hard. And the people who try to hype it up and make it seem like it's hard, like, okay, editing a Mr. Beast video. Like if I had to work for Mr. Beast as an editor, perfect example, someone like him, his edits are insanely complicated. If you watch 1 minute of a Mr. Beast video, I'm telling you right now, count out the edits. And I don't just mean visual edits. I mean, count out edit, like in terms of text on screen, visual edits, sound effect edits, camera cut edits. Mr. Beast probably has about 40 to 50 edits in the first minute of a video, like just in the first minute. And if you watch like the first 10 seconds, he probably has at least like 15 right there. So because that's just the way that his videos are structured. Like he understands human psychology, and he understands that the average person's attention span is only 4 seconds, which means that he has to constantly make cuts and like jump right into action to be able to hook and to draw in the viewer. So that's why he does his videos the way that he does. And you could watch interviews with him and watch him talk about that fascinating stuff. But Graham Stephan, again, there's no reason for him not to have other people working for him. The guy made $6 million last year, and I just don't understand why he doesn't have more people working for him. I don't even mean like you don't need people on salary. You could literally pay people on results. Like you could hire people, and I know, God, you talk about this too, like hiring people in terms of results orientation, where it's like, okay, if you upload like 2 videos a week, you get X amount of money. If you upload 1 video a week, you get Y amount of money. And that's how you could do it. You don't even have to pay people per hour if you don't want to do that. He clearly has the capital and the time to hire, excuse me, I'm burping, to hire other people and to train them, but he just doesn't want to do it. And I don't understand why.
I mean, he's just simply he's I think it's because he like his stress levels. He worries too much. He's a control freak. He wants to basically control every aspect. He thinks if one of the people mess up, then it's gonna screw up the algorithm. He lives in this like kind of this like those people that have the crystal balls. What are they called?
What, like a
crystal
fortune teller?
Yeah, he lives in this fortune teller world where he thinks, everything has to go perfect and you don't have to have any adversity and you have to follow this streamlined path. Like, no, there's going to be adversity. Your employees are not going to do the same. They're not going to put the same amount of effort in that you do. But you have to accept that you have to basically diversify your time and focus on more meaningful things, more important things so that you can expand and grow. And he keeps worrying about nonsense. He should have this vlog channel. He should keep it going. And I don't even know why he shut it down for. That would probably add about, I don't know, $100,000-$250,000 of income. He could hire realistically 2 to 3 people to work on it. Meanwhile, he really only needs one person to work on it. So there's an arbitrage there of like $100,000 a year in income. And he just gave it up for no reason. He wouldn't have to worry about it. He wouldn't have to do nothing. That's like a free $100,000.
Yeah, and I'm glad you bring that up, because if he did bring another person on board, I mean, I saw the podcast where he had Alex on, Alex the editor, and Alex, it seems like he does a lot of work, and it seems that he does a lot of good work, because apparently on a lot of the on most of the videos that I watch, like Alex does most of the editing, so it seems like he's doing a pretty good job with editing. But it's just like you could easily bring another person on. Like I said, film, it doesn't have to be weekly, like once a week. You don't have to do exciting shit, but like just try to film like, a couple hours a day on like an iPhone, like completely unedited, and then let someone else edit it. Like that's it. Literally have a GoPro, have an iPhone camera, put yourself on camera. Oh, hey, I'm doing this, blah, 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 whatever. And then what you do is that's it. You let someone else worry about it. And also his videos, like he should have structure for his videos, have an outline of what you want to talk about, hammer home the main points, and like don't really drag it on. Like, and the other thing too is that if you fuck up like during a take, sit there and film for like 2 or 3 hours a day or however long it takes you to do a video. I would think at this point you have a process that where it really doesn't take you 3 hours to film, maybe 3 hours of like planning and filming. Because I would think that planning should take a lot more than doing the video itself. Like at this point, with where he is in YouTube and how long he's been doing it, he should be getting everything done on like the first or second take. And even if there are segments like where he screws up, break everything down into points. Like, if you have a main thing you want to talk about like the 5 most important things about it. And then what you do is record all of it in one take. So like talk about the first point, but maybe do 2 or 3 takes of the second, third, and fourth and fifth point. And like in that sense, then you could kind of mix and match them, because you're going to have a transition or you're going to have some sort of break between the first and second point. So like, for instance, let's say you nail the first point that you're talking about and you do 3 takes, and the first take came out the best. So you use the first take, and then the second point you're talking about in the video, like maybe the first take you didn't do too good, but the second take you did for the second point you did good on, use that take. Then maybe the third one you did like, the third point you're talking about in the video, like the first take that you did was perfect. And then the fourth point, like maybe the third take was the best one. Like that's how you got to do it. You got to be smart. So this whole notion of like, oh, I'm going to film for like an hour or like 15 minutes of like a video and it's going to be perfect. Like it's not going to be. And as far as like the editing in his videos, it's like pretty simplistic. Like it's not anything crazy. It's literally just jump cuts. And then he cuts to like different audio, or like I noticed Jack's been putting like a lot of memes in the videos. So like that's cool shit. And that allows him to at least put some type of like artistic spin on like what he's doing. But as far as anything else, like, you know, the editing, like compare that to like a Mr. Beast video. That editing is nothing. Like it's nothing really to be overly concerned with. And you know, I think a lot of people, a lot of YouTubers in particular, or people who are in like the creative space, like content creators, they struggle with this problem of like they feel like they're losing creative touch when they hire editors. But the reality is like you're not losing the creative touch because you're still designing and creating the video itself. Like just because you're not a part of like the editing process doesn't really mean anything. At least in my opinion, I don't really see a big problem with that. Like if I had people working for me and I knew that they were very good editors, like I'd let them put their own spin on it. I'd record, I'd create the planning for the video, I'd create like titles for the video, and then that's kind of it. Like, and as far as like what Graham's doing with thumbnails and stuff like that, I mean, his thumbnails are on the main channel, they're all pretty much the same. Like he makes like 3 faces and then he just puts it in like the right side of the video, and the videos tend to do pretty well. But it just seems like at this point, like I mean, he's got to move more towards just focusing on other areas, like because he, like I said, he has the money and he has the resources to hire more people and to kind of take a load off. So I don't know. And if he thinks that the people who are working for him aren't doing a good enough job, then you got to look for other people. And at some point, you got to find people who are much more goal oriented and people who share like the same ideas as you and people who are more receptive to like how you want the videos to be structured. I mean, there's no reason not to. Close out today's episode. If you're still here, I'm glad you stuck it out to the end. Leave a comment down below. Comment
Hit that
jumping.
motherfucking subscribe button. Otherwise, I'm gonna come to your fucking house. You better hit that subscribe button.
Yeah, we're gonna pull
Anybody
up.
listening?
We're in the
If you made
space.
this
We're in
far
the spaceship.
and you don't hit that fucking subscribe button, right? I'm pulling up with a Marty McFly vehicle, and you're gonna have major issues if you don't hit that subscribe button.
We're pulling up in the spaceship. That's why the spaceship's always driving, right? It's always driving. It's always flying. We out here, you know? We're always in motion. And if you notice, we're always moving forward. And that's how you have to be mentally and physically.
Right.
And on that note, thanks for joining us. Have a good time. And come back next time. If you made it this far,
that's it.
That's right. Like, comment, and subscribe. If you made it this far, comment down below and write down jumping kangaroos. That's going to be the code word for today's episode. Peace out, everyone.